Hello, everybody. Happy Thursday. Welcome to another episode of Gold Rush right here on Stock Market TV. I am Sam Gatlin, joined as always by my very good friend and esteemed colleague and co-host, Mr. Jason Pers. Give it up, everyone, for Jason. What's going on?
What's
Happy
up,
to be
guys?
here. We have a lot to talk about. I think we want to lead today's show talking about precious metals, but I think we want to save some time for energy too, Jason, because man, energy's looking very nice. You've got crude oil futures up, let's see, 2.2% today, making a big move. I mean, energy stocks continue to rip across the board. The XLE closed last month at a new all-time high, and now you have the equal weight energy, the RSPG, making a move to new all-time highs. So you're getting confirmation across the board that energy is working. It's breaking out and holding those breakouts, and you're just getting more and more and more participation in the sector. So I think we definitely want to spend some time on that. So what do you say, Jason? Should we just get right into it?
Let's jump into it.
All
We got
right,
a
all
lot
right.
to get through. This
Gene,
will be a fun one.
my good man, Gene Gote, behind the scenes. If you'll throw up slide number two, let's just rip through these charts, Jason. We've got gold priced in a variety of major currencies. And, the big theme here is, these do not look like downtrends. These are uptrends. Maybe there's some short-term volatility creeping into these um, gold products priced in a variety of currencies, but, zooming out, big picture, these are still uptrends. So look at gold priced in euros. Look at gold priced in pounds. Gold priced in Japanese yen. Gold priced in Indian rupee, new all-time highs. Gold priced in South African rand, new all-time highs. Gold priced in Swiss franc, same thing there. And then looking at gold priced in the commodity currencies like the Aussie, the Loonie, the Kiwi, and the Noki. New all-time highs, Jason. I mean, how can you fight this trend?
Hey man, I heard gold was dead. That's what I heard. I mean, I don't know. I mean, to me, like, look, guys, like we've talked about the targets, and Sam has done a great job of highlighting the targets for gold, silver, and so on. And so we talked about, hey, we're going to hit these levels, we could consolidate. Hey, we could hit these levels, we could see some sell-offs. But I think at the end of the day, if you're just looking at the primary trend of gold, I mean, this chart says it beautifully, which is it isn't an uptrend. As much as I'd love to say, like, hey, the trade's over, hey, it's that. I didn't get a stop signal on the gold futures position, so that's been just hanging on nicely.
But you were
It had
stopped out of silver.
stopped out of silver. So it's got stopped out of silver, but gold has continued nicely. Most of the miners, the ETFs have continued nicely. They didn't get stopped out. So once again, it's the same thing I reiterated the day the crash happened. We actually did a live on the silver crash. And so the day that the crash happened, I basically said, hey, silver's out, but the rest of them are still kind of hanging on. So we just have to see what happens. And so far, so good. Looking at gold, though, month after month, new highs. Sam, I know what was it? 14 straight months that you showed the other day on
14
Twitter?
consecutive months that
Yeah.
gold has closed higher. We've never seen that in history before, Jason. And,
Yes.
I didn't bring along the chart here today, but, if you look at the yield curve, it continues to trend in favor of the precious metals. I mean, I think it's the highest level since like 2022.
Yep.
It's been many years since we've seen the yield curve like this. So, the
It
macro environment is
continues.
still favorable for gold. And I know you've been talking a lot about how, central banks continue to buy gold at a very aggressive rate, like we've never seen before. And, that's a pretty nice tailwind to have, Jason, is central banks just like dollar cost averaging. They just have the algorithm cranking out buys, constantly hammering the bid. I mean, it makes it really difficult for gold to go down if you have that.
No, I agree. I think we're just in a very strong structural macro environment for gold. It doesn't mean that, I want to be doing it blindly. Like here, we're always going to be data dependent. When things break trend, we'll update you. We'll be shorting things and so on when this happens. But if things are not breaking trend and the data keeps pointing to more upside, whether we're looking at intermarket, trend, momentum, any of the indicators we use, any of the scans we look at, any of the intermarket ratios we look at, these continue to point to higher gold prices. So I just want to be very cautious here about getting too bearish on any of these things when these things are obviously in very strong primary uptrends.
Totally. Yeah. You want to short things on the way down, Jason. And, right now they're just, they're making new all-time highs, but, short term, it's kind of more of just a sideways churn. It's
Mm.
messy. You
Yep.
want to short things like I was going to save this for later, but I mean, the soft commodities, holy
Oh
cow,
yeah.
are really falling apart. And, there was a long time here where it just carved out this top and you didn't really want to be short during that time. And if you want to short precious metals, let it form a top and then short it on the way down. But
Yep.
so far we have no evidence that that's the case. So it's still way too early to be getting aggressively short the precious metals, in my
Great
opinion,
point, Sam. Great point.
for sure. You want to shift gears, talk about, crude oil and its relationship to the bond market? Because, you know, this might be one of the most important macro charts in the world right now, Jason.
Yeah, if we're looking at this, we're basically getting the idea here that crude oil and the 10-year or 30-year yield, whatever you're looking at, have diverged quite a bit. And so as this divergence has happened, we basically have come to a breaking point, meaning these jaws are getting pretty wide for something that historically moves together. At some point, this is going to catch up or catch down one or the other. I'm still betting on crude oil just continuing higher and yields continuing higher with it. I still see that they're not issuing a bunch of bonds recently, which is creating like a supply issue. They're not trying to put them up for auction as much. So once in the 30 year at least. So the 30 year continues to be under a lot of pressure for those reasons. But once again, I do think that that's any type of manipulation, any type of short term movement like that is going to lead to something being sideways. And then at some point, it's going to make a decisive move. I think that decisive move is going to be higher. I think the energy market is screaming it at us. I think the bond market, a lot of people are really talking about the little move that's happened in bonds recently. It's cute, it's adorable. Yes, it could continue. If it really continues, I think that's something to look at. But for now, it's just like, hey, it's just if you look at it any way, you're still making more money on the downside on bonds than the upside. We're just trying, people are trying to catch this bottom, and it's going to be a very hard bottom to catch if energy and oil continue to move higher. And I don't see any reasons to think here that energy is done. I think energy is the trade to be in, way above bonds. And I think bonds is going to be the way to lose money going forward. But once again, let's be data dependent. Hop to the next couple charts, Sam, because we'll talk about this as well. So this is copper. Copper is also, screaming to the upside. It's kind of screaming higher yields as well. This is another one that really runs with yields quite nicely. So as this is running with yields, we're probably going to be in a scenario here where the 10-year yield, the 30-year yield, we're going to start to see those move higher soon. So things like TLT will move lower. So I do think that this is something to pay attention to. Dr. Copper is telling us something. Crude oil is telling us something. And then if we look at the next chart, this is TLT. So we look at TLT and basically this idea here that, okay, this thing possibly bottoming out. It's possible, right? Anything's possible in markets. I always am going to go with the highest probability bet, though. And the highest probability bet is to say energy, which is already broken out, will probably continue. And this thing at some point will fall on its face. Now, bonds and energy for like people will be like, well, bonds and energy. People will send me like a screenshot where it's like TLT moving up and XLE moving up. They'll be like, see, this can move together. Yes, short term periods of time, almost anything can move together or against each other. Long term, structurally, this is not going to continue to move together. We're going to see, XLE continue to the upside and bonds continue to the downside. The only way that bonds are going to move up is some sort of deflationary shock, some sort of panic out of the market and into dollars and bonds. If these things happen, we're going to see this show up in the price of bonds pretty quickly, and bonds will move higher. And then also, what will be important to watch, and even more important to watch, is energy will fall on its face. I do not think that scenario is coming by any means. I think the opposite scenario is here. But if I'm looking at one thing that could invalidate my thesis, is what you should always do as a trader, I would look at TLT and the new 52-week high and see if it might hit it. It hit one. It's funny if about 52-week highs in TLT. This thing has only hit one 52-week high since 2020. So basically, that was
That's pretty
2020.
crazy. Do you have any like
Yes,
data like
I can.
going back many years? Like, when's the last time that happened? You have to go back to
I
the
would. You'd have to go back to the 70s, man. Like
yeah.
that's the only way you could actually get back to a period where that's been the scenario. Because this is completely different than what's happened in the last 40 years. So it's basically been in an uptrend from 19. It was 1982. Was the bottom in bond prices, and so 1982 they just kind of went up steadily all the way till 2020. And so 2020 they rolled over, as you can see here, and then they only made one new 52-week high, and that would have been in 2024, right before the Fed started lowering rates, which is hilarious to think about. But once again, now we're here today, and this new 52-week high, that's the question you have to ask yourself. Keep it on your radar. It could tap it. If it taps it and just goes through it and starts to look really good, that's a scenario to kind of change your mind on the energy trade. If it taps it and just goes below it, I wouldn't really worry about it. And that's kind of the scenario I would think going forwards. I don't think it's really going to blast through this. I think that the energy trades where you still want to be, the copper miners are still where you want to be. Even gold looks good still. So I think we're still looking at lower bond prices, higher energy prices going forward.
Totally, and that's what we're seeing today. As I mentioned at the top of today's show, crude oil futures are up about 2%. But that's one day. Looking at the trend here, Jason, I think we are on the cusp of a major trend line violation here in the crude oil futures. So if you go back to the peak in 2022 and draw that multi-year downtrend line, looking at weekly closing prices, you are right there. I mean, just one more good green candlestick, and this thing is breaking out and entering a brand new primary uptrend. And I think there's huge potential here for a catch-up trade. I mean, look at what has been happening with these energy stocks. I mean, ExxonMobil absolutely ripping to new all-time highs, the largest American energy stock out there. It's like $500 billion in market capitalization. I mean, absolutely ripping. So I have a hard time believing if that is happening and it's sticking and it's not just completely reversing and falling apart, which it's not. I'm not sure if you've seen that, but ExxonMobil very much is holding its breakout. I have a hard time thinking crude oil is not going to be trending higher towards $80.
Yeah, I really like the idea of crude oil here. I think like if you look at heating oil looks great. It's one of the leading commodities this year. I can't remember the exact percentage, but it was up over 25 to 30 just the other day. So heating oil is moving nicely. You got gasoline starting to kind of catch a bottom. Crude oil is rallying. Energy stocks are doing exactly what you would want them to do in this type of environment. It's in time to really put our foot down and put our foot on the pedal. I'm terrible at phrases. I don't even know why I say them. But anyways, but it's time to really hit the gas and this will start to move. I really do think that this is probably a scenario that really leads to the commodity cycle continuing and just having a little bit different of a look. Probably seeing base metals really continue. Sam had a great chart earlier this year talking about the fact that base metals, you might have missed the precious metals trade, but the base metals trade, you don't want to miss that one. I think that's spot on. We've been seeing it already. Sam and I have been positioned in that for probably a year now. And now moving forward, we're seeing energy, agribusiness, agriculture, and so on start to catch a move. Even wheat's up 10% this year. We got soybeans up over 10% this year. So we're starting to see things finally start to move that direction that we've been talking about for a little bit. So I think now's really the time to go, hey, crude oil, agriculture, let's start buying these things. Like somebody said in the chat, super cycle. Like, yeah, I fully believe we're in a super cycle. We're just positioning from one to the other as we should as traders.
Totally. Jay Hampton, shout out. You know what's up.
Yep.
This is what a super cycle's like. I mean, we've been making a ton of money in the precious metals, and now we're rotating into energy. I mean, look at this rotation, Jason. This is exactly what we mean when we say, rotation is the lifeblood of a bull market, of a commodity super cycle. I mean, this is exactly what we're talking about right here as energy is climbing out of a massive base versus the S&P 500. I mean, this crude oil chart that we were just looking at. I mean, this does not look extended at all. This looks like the beginning of a brand new primary uptrend. And it's the first time we're seeing new 52-week highs for this key intermarket ratio for many years. So, I have a very strong suspicion there are more 52-week highs to come.
No, I do too, Sam. I think that this is an area where we're going to continue to be highlighting trades all year long for our members. And I think that's the thing to really think about that we do really well here at Gold Rush, which is, we're not just gold guys. Like we're going to trade just about everything across the board, all the commodities, but also the commodity and cyclical sectors that benefit. We're even highlighting chemical stocks and so on. And then moving from gold, we had gold miners, silver miners, and so on the last couple of years, moving into the last year of copper miners, base metals, aluminum, lithium, solar stocks, and coal stocks, even. Now, this year coming forward, now we've got a lot of energy stocks, agribusiness stocks, just playing the cycle the way we should. So I'm glad our members seem very happy. A lot of people continue to write me all the time about all our great picks. I love that people are having a great time with that.
Totally. And it keeps it exciting for us too, Jason. Like for a
Mhm.
long time there, it was just precious metals. That was the hottest trade by far. And now, like you said, we're trading agricultural stocks. I mean, it's been so many years since agricultural stocks have been
Yeah.
trading well. So I love that about the markets. It's never a dull day around here. And um, yeah, wouldn't trade this position for the world, Jason. We are lucky to be doing what we were doing here. No
Yes,
doubt.
absolutely.
So natural gas stocks. I don't think many people are talking about this, Jason. So last year we saw a nasty shakeout below this multi-year trend line support. You scooped quickly back up into the range, and here you are getting that breakout after the shakeout. So, a lot of people are talking about XLE, just those major energy benchmarks breaking out. But natural gas stocks, do not forget about these. These are working very nicely, and this is despite the weakness we've seen in natural gas. We were talking just now about how crude oil is trending higher, trying to violate this multi-year downtrend line. Heating oil, gasoline look really nice, but then you have natural gas. You say all the time, Jason, it's the Exorcist. Is that right? It just does whatever it wants.
Yep, you got that right.
Yeah, that's the
Exorcist
truth.
trade. Natural
It's so
gas will
true.
always be the one that does whatever it wants to do. It will trend up, it will trend down, it will and I think my favorite thing about having it in the portfolio whenever I trade natural gas is okay, well, we're having a green day in the market. The S&P 500's up or whatever. Let's say everything's up, all commodities. It'll be like one of those green days where every single trade you have is green. You're like, wow, that's great. Natural gas will be red as fuck. And then you get basically to the other end of it and you have everything down on a day, like everything that the world's ending, whatever it is, and natural gas is just as green as it can possibly be. The natural gas stocks are much less volatile, so this is an area for people who like a little bit less volatility. The ETF is liquid enough for most people to trade unless you're running 20 billion or something. Then obviously if anybody listening is running 20 billion, probably don't buy this one. If you're running the normal amount of money that most traders on here are running, even to even 100 million, you'll be just fine with this ETF.
Totally. And you have names like ConocoPhillips. I think I saw that name. Yeah, the Jev in the chat mentioned ConocoPhillips looking great. That is actually the largest holding in this FCG ETF. You also have names like Occidental Petroleum, one of the largest holdings in the fund, which is up big today, Jason. I don't know if you've seen this move, but Oxy is up about 9% today after reporting earnings, and it is reclaiming the volume weighted average price anchored to this key pivot high from April of 2024. So the buyers are back in control of Oxy, the Warren Buffett special. And man, like we've been saying this whole show, more and more energy stocks are participating to the upside, not fewer. We're seeing, ExxonMobil led the way higher. It rang the dinner bell, and you're seeing a scramble for energy stocks. And Oxy is just the latest example of that. Another name that investors have been tripping over themselves to get in their portfolios are these marine shippers. I mean, holy cow, Jason. We've been pointing out the marine shippers ever since it put the finishing touches on this base. So that looks like it was late last year. here at about 7.5 on this index. But man, it has not stopped. You've had really nice, just short corrective waves that have immediately been bought up and resolved to the upside. And here you are trading at the highest level since 2015. New multi-decade highs for the marine shippers. And, if you look through these components, we have them listed here on the chart. Most of these are, I think, that probably 95% of the marine shippers out there that are publicly traded. I mean, there are some massive bases out there, Jason. I think for all you gamers at home, like pull up a chart of TK. That's the TK Corporation, ticker TK. I mean, this is exactly what we are looking for. I didn't bring the chart along today, so you'll have to pull it up on your machines at home. But man, big, beautiful base and tremendous upside. Like TK is trading at $12 today, but I think this could get back to what? What is that? 70? Upper 60s. I mean, potential for massive appreciation in these stocks, and a lot of them trade pretty significant, or they have significant dividend yields. You see that a lot in energy, but in these marine shippers too. You can get paid 5% just for holding the stock and letting it 5x for you. Yeah, it's not a bad deal. I mean, you can go ahead and sign me up for that, Jason. I don't know about you.
Yeah, I mean, when I'm looking at the shipping stuff, and the reason why I know so much about it is Kashop, basically. We've had him on. We should bring him on again sometime soon to talk about the
Yes, we
shipping
should.
trade. But he was the one really pounding the table back in 2020 about some of these names, which is pretty wild. And that was when a lot of them made, like, 10x returns and so on. So once again, like, so I always have a bunch of these names and kind of ready to go. But at the same time, we did put out, actually, the last time we were live, we did talk about Frontline once again. So Fro
Yeah,
is in there. So you're seeing these, like Sam said, you got TK, this big base breakout. You've got Fro, big base breakout. You're kind of seeing this all across the board. And then the Marine Shippers Index shows you that this is kind of happening to a lot of these stocks currently. So definitely go through there. You're going to find some names that are just starting to get moved. And if you guys are traders yourselves, which I'm sure everybody on here is, you're going to find some great names to just kind of buy a breakout in and see where this thing ends up, because these are not trends that you want to buy when they're consolidating. These are trades you want to buy when they're breaking out, and now's the time. And I think that's also what we talked about when the shippers started to move in December of 2025. That was a good signal to say we're probably going to see energy start to move next. We started to see energy move next, but these things are already going. And so I think they're going to continue to go and probably just benefit even more from the energy trade currently.
totally. And what we're looking at here is an equal weight index that we created at Gold Rush. But if you are looking for an ETF to express a bullish thesis on this theme, there is an ETF here, ticker BOAT, BOAT. And like I mentioned before, massive dividends in these stocks. This ETF supposedly pays a 6.5% dividend yield. So more than bonds are yielding. Plus, you're getting that tremendous price appreciation, and this is just now breaking out to new all-time highs. So I love this theme, and I don't think it's going away anytime soon. And Jason, I wanted to finish today's show talking about the soybeans. I mean, the soybean complex continues to work tremendously well. You mentioned earlier wheat is up 10% this year, but man, I have to say the relative strength inside of the grains pretty decisively belongs to the soybean complex, whether it's the soybeans themselves, the meal, or the oil. I mean, this is the place to be. I continue to think that oil is the best opportunity inside of the soybean complex. And we highlighted this last week in our Commodities Weekly column that you can go check out on the blog, allstarcharts.com/gold rush. But 57, key level of interest here, and soybean oil futures are decisively breaking above that 57 level. So I think 65.5 is the next stop for these soybean oil futures.
Yeah, and let me also correct that. So heating oil earlier I mentioned was up 25 to 30% when I looked a couple days ago. Now it's up 38% year to date currently. So
Hey, that's it.
yeah.
38%.
So heating oil is very similar to diesel, guys. So remember, if we're seeing that move, we're really going to see gasoline and oil probably catch up to that pretty soon. So
So,
keep an
Jason, let me
eye.
ask you this. Do you think that has anything to do with the rally we've seen in the transportation stocks?
Absolutely. Yeah, absolutely. Because I think that's an area where a lot of people forget. Like a lot of people look at people traveling or, oh, they're like people eat at home now because they're ordering stuff. Well, people still have to drive to transport that, but people just kind of overlook that fact. But then if we look at, all these boxes being shipped, all these trucks that are using diesel currently, like the home economy is actually boosting diesel prices quite a bit. So I think that's where your outperformance is going to be. Now, I know once again, not many people are going to have access to trade heating oil futures. It's not really that hard to get access. It's just a lot of people just don't trade futures. But heating oil is probably going to be the one that leads the way. But what that can tell you is that most of these companies underneath that surface, like in the crack ETF, Sam's always highlighting that. I'm always making jokes about it. But once again, that's an area where you want to look inside, and you'll probably see some great names as well, which will continue to benefit from this idea of heating oil moving. But also, right behind that is soybean oil futures up 22% year to date.
So
So,
those are the top two year to date.
yes. So while everybody is talking about, oh my gosh, the US dollar is down 27 basis points, the S&P 500 is down 3.3 at the moment. So like if we're looking at those, everybody's like, oh my gosh, there's nothing to buy right now. The market's under so much pressure. And it's like, guys, we've seen some great like energy is up over 20% year to date. And then if we have the energy sector, so XLE, small caps up even more. Then if we look at materials, they're up quite a bit. I think 17 or 18% in the materials XLB. That's large caps, small caps up even more. We're definitely, and we see breadth widening out. There's a lot of things to buy right here, right now. It's just maybe avoid the Mag 7 names for a little bit. It sounds nice. A lot of people see it moving down. They're like, hey, I need to buy. Same with Bitcoin. Oh, it's moving lower. I need to buy this thing on the dip. I need to buy Microsoft or
It's like a
Apple.
mental illness, Jason.
Yeah, yeah. Like everybody wants to buy things as they're moving lower. And I'm not saying you're wrong. Like a company like Microsoft can, if you're a long term investor, sure, whatever. But as a trader, like I'd rather ride the things that are showing relative strength. And that's where you're going to continue to make money. I mean, even something that got hit as bad as silver is still up 10% year to date. So gold is up 15% year to date. Also, Japan, the international trade is really taking off. We've been pounding the table on this for God knows how long, screaming about Latin America, uh, Asia, South Africa. Sam has highlighted some great stocks in South Africa as well. So, like,
Now
we could
Thailand, Jason. Have you seen the
Thailand,
Thailand? A lot of energy
we're
exposure
long
there in
it. Yeah,
Thailand.
yeah, we're long currently.
Woo wee.
Yeah.
So, man, since all right, since the low in early January, Thailand is up 25%, just in a
Yeah.
straight vertical line. That's at an index level too, Jason. I mean, under the surface, you're seeing some wild moves there.
Yeah, I mean it's this is the thing that you want to understand as a trader, which is like do not get wed to anything. There's nothing in the market that loves you that much either. I have all these positions. They never write me when things go wrong. They never ask me how I'm doing. They never go up when I want them to. They're never going to do any of these things. So why do you care like that you're in a company that like I know this company well? Why are you like, oh my gosh, this is a US stock? Like most people don't even know how many stocks are in the US or not. Like there's a lot of them that are outside that a lot of people trade every day and they have no idea it's not even in the US. Just look around the world. The world's a big place, and especially in a cycle where the dollar is weak and the yield curve is steepening, and you're seeing all these commodities moving. There's going to be a lot of money to be made internationally. So even something like Thailand, which is going to sound funny to people and different, there's trades there too. So just continue to find that relative strength, and we'll keep highlighting it as we go along and showing you guys where we're positioned, and you guys will make a lot of money as well.
Totally. So if you want to see our trade ideas for whether it's commodities, bonds, currencies, precious metals, energy, all of that, you can get access with All Star Charts Gold Rush. You can see the link in the description for more information on that. And of course, If you don't like what we have to say or what we're doing here, we'll give you your money back within 30 days, no questions asked, and we can still be friends. We can hang out here every Thursday during the Gold Rush live stream on Stock Market TV. And of course, if you liked this video, we'd greatly appreciate it if you left a like on the channel and subscribe to us so we can continue bringing you awesome content like this and much, much more. I mean, we're doing a lot here at Stock Market Media. We do the morning show every day, but we have so many different things going on here. Like, you have Straza with the open bar, you have Riley doing the Godspeed, and you have Louis Crypto After Dark, Chart Request Live. I mean, there's so much happening here. And we couldn't do it without all of your support. So, yeah, thank you everybody for being here. Shout out to the Jay Hampton in the chat, the Harmander, Frey Lee, all of the regular pounders here. Thank you so much for showing up and making this an awesome show for everybody. Until next Thursday, try to stay safe out there, try to make some money, and don't fight the trend.
And yeah, guys, just to answer a question real fast, what is the ETF for soybeans? Soybean is correct.
Yes, it would be nice if there was like a soybean complex ETF because I want the
Oh my
oil.
gosh, yeah.
I want the meal,
Yeah.
I don't just want the beans.
Yeah, I mean, DBA, if you want broad exposure, DBA is great, but also, as Sam highlighted earlier, you're going to run into a lot of pain that's going on in the softs currently, which does happen. So be careful of that. But I definitely like soybean. That's a good one. Wheat, the ETF for that is WEAT. Corn is just corn, CORN. So, all right, guys, thank you guys for joining us. We had a great time. Make sure to hit that like button, and definitely we'll see you guys next week on Thursday at 2 p.m.
Adios.